Today's edition of the 600 Seconds of Trading, which is our London Open European trading session market overview here at TradeCaptain.com. My name is Alejandro Zambrano, and I'm the Chief Market Analyst here at TradeCaptain. And we're going to take a look at things like the Euro, Bitcoin, gold, crude oil, and the DAX 30. Today we have Hi in the chat box. We also have David. Thank you so much for joining us, guys. I also added two links there, one to our Trade Captain Twitter and one to my own Twitter at AlexFX00. I do suggest you follow both of those accounts because it's a good way of keeping track what we're up to. On the Trade Captain Twitter, you get access or you get notifications of all of our research and all of our updates from the team, Yuri, Nathan, and Harris. And of course, in my own Twitter, you get notifications of my own research, but also other things that I find interesting and worthwhile sharing. Okay. Hi says, weird night with the Asian stock markets. Yeah, it's I wouldn't call it necessarily weird, but I understand what you mean. So tariffs were introduced in against China, and it's going to be 10%. I mean, they haven't been introduced formally, but they will be introduced, and they're going to start out with about 10% instead of 25. And the way people have reacted is that they believe that is less aggressive than initially thought. So if we look here at the Shanghai stock market, it did decline a bit, but sorry, let me see if I can find it. It actually gained, sorry, it gained with 1.82%. It's quite interesting because it was on the cusp of trading much lower. Here is the Shanghai stock market, and this is the January 2016 low, and that attack against that low now, I mean, the low survived, but the issues are not gonna go away. I think maybe they'll put it here at 10%, and they talk tough in the US, and if nothing is resolved, I think before in this year, I think by next year, especially after Christmas. So after everybody bought their presents, I think they're gonna pull. They're gonna be really tough. If that's what I think the Americans will be. But yeah, the market bounced, and I think as well. I haven't seen the China A50, but this is the China A50. So pushing to the upside is still in a risk of trading down lower. This is a 6-hour chart. So this is data from July, August, September, and still under pressure, but not really too much. No, definitely not a bearish day. You had the other markets as well, which is something we talked about yesterday, which is the Japanese stock market, which just rallied strongly. And I think I think this could be linked to the fact that there's a new trade agreement between the EU and Japan, and that will minimize trade barriers. So a totally new minted trade deal has taken years to develop, as far as I understand, and it was introduced, I think, less than a month ago, formalized. So it's easier now to sell to China and to buy from China and vice versa. Sorry, not China, sorry, Japan. Sorry. I think that could be a bit of a local thing influencing the Japanese stock market. Yesterday we got a good question by David about this market, and I said that if we would pull back, well, I think at least I hope I said it. I said any sort of pullback should probably lift to the upside. I actually went, I bought yesterday pretty much around the close, so around 23,170, and overnight the market moved slightly lower, but I had my stop loss just above this low here on Friday, and then you can see how the market just propelled to the upside. So this went really, really quick, and I already reduced my stop loss to today's low. So I was risking at 2%. Now I have a risk of about 1%. And I'm almost up with 2% already. And if it continues to gain, my risk reward ratio was set on 5-ish, I think 5 times the money. So I'm looking at, if it goes all the way to the target, potentially 10% return. And if it just goes to the 2018 high, it's obviously less than that, but still a solid risk reward ratio, especially given that right now I'm literally stricken at 1%, and I'm pretty much up with almost 2%. So I already have a 2 times risk reward ratio right now. What I do find a little bit weird as well is the Aussie stock market. So the Aussie stock market is up with 0.31%, or Aussie dollar versus the USD. It's up with 0.30%, and I mean, I know it's less aggressive, and I mean, even with the sort of Chinese stock markets, it's less aggressive rate hikes, but we're no way closer of getting some sort of a deal here. I think they will go down, and it's gonna be tough. And I don't think it's gonna be done very quickly. And soon you'll see the damage on the Chinese market, and you definitely see the damage in the U.S. as well with higher inflation. So it shouldn't really help the Australian dollar at all, but the Australian dollar is up a bit. Technically here, if you look at this, as you might remember, I did talk about this, and I said, let's be bearish below uh, this day here, which was the non-farm payrolls day. I was stopped out here, and since then the market is just trading sideways, and it doesn't know if it wants to be up or down. So I'd rather look at this from a bigger picture, like a daily chart, and just sort of say, okay, we're trading sideways here in an overall bearish trend. So obviously, if it's trading down at 69 at one point, it would not surprise me at all. But right now, I want to take a step back. When the market does not behave the way I want to, and especially when I lose some money on it, I usually take a step back and sort of focus on something else. That's usually a good thing to do. Okay, so let's take a look at the main markets as we usually do. So this is the euro versus the USD, and there's nothing new here. Nothing new under the sun. This market is just trading sideways between the June low and the July 31st high. Um, it's easy to be tempted. You can trade the ranges, sell the highs, buy the lows, and sell back here into the middle. But we don't have to. We can just wait for a very nice setup and just trade that when it happens. As an example, that Japanese stock market position. I bought the Japanese stock market, and I'm not trading the euro. Last time I traded the euro was when it breached the downside, and then got out here somewhere for a small profit. And since then, it's just traded sideways. And it's just, honestly, I think it's a waste of time. And I do think it's going to break at one point upwards or downwards. But I wouldn't be wasting my time trading this right now. Bullish, bearish. I think what you can do as well, something that I'm going to watch, you click on tools and you go on sentiment. So right now the market is positioned, so 70% of traders are long with a Amana Capital. So usually when we're dealing with a range like we're doing right now, the retail investor tends to get it right. But when you see the start of a new trend, they tend to get it wrong, which means that if the sell orders pick up and we have, say, 60% short and 30%, sorry, and 40% long, then, and we have that break to the upside, then that would be a good indication that we're probably going to trade higher. So that's what I would focus on. Or not focus on, but I would keep that in mind and help validate this. And the reason why I say this is because from a purely macro fundamental point of view, this market should be down here because of higher interest rates. It shouldn't really move up to 120. It could do so because of technical issues, technical trading, but in the long run, it should be lower, not higher. Here's the pound versus the USD, and you can see the price is still stuck where it was yesterday. And a few days ago, we said look to buy here. Unfortunately, we missed that entry with a few pip, and it doesn't make sense to buy here. This is where we wanted to profit. Now, if it goes all the way back down to the same buy area, I think it could make sense to potentially look to buy, as long as you trade above the September 11th low. and then potentially allow this to move to the upside. There are challenges with this market though. It's a corrective move against an overall bearish trend. At one point, the bears could come back and it could be a vicious downtrend. So I'm not personally buying this because it's not an amazing opportunity, but the trend is bullish, and for now, as long as it remains short-term bullish, I want to be bullish. So if you know what you're doing with your scalping, I would look for buy opportunities rather than for sell opportunities. Gold is trading sideways between the September 11th low and the August 28th high. This could be interesting. It's been tricky with me. I was bearish and then pushed up, got me stopped out. Well, got the view stopped out because I didn't hold the position on it, and then moved down. And then yesterday went pretty much back, pretty much to around the same entry levels that I shared with you guys. Now I didn't trade this directly. I didn't trade it all. I just shared my view with you. And I know that from that perspective, or just sharing analysis here, it has been difficult because we didn't make any money, or the bearish view did not develop, the bullish view did not develop. And that's a strong indication, really, that, take a step back, don't get involved here because it's trading sideways. And the problem is you don't know when you're trading with the market trading sideways until they are trading sideways. And then it's our responsibility as a trader to say, be grown up about it and say, okay, you know what, this is trading sideways. So I had a few losses, short for a few days, didn't work out. Long for a few days, that did not work out. So then you would take a step back. Now here we are working with these lows, and I think this could be treated like a rectangle, and from the high to the low, that's a difference of $26, which would project a decline to the August 15th low, and then from the same difference here would project a move up to 1240. Now we just need to wait for a break. Now I think what one can do here to not get into too much trouble is to, what is the overall currency market doing here? Are we seeing dollar weakness when this trades upwards? Or do we see general dollar strength when this breaks downwards? Most likely you will have a decent trend here when you start to see something maybe in the euro dollar. The alternative is that you keep an eye on things like silver, platinum, and copper. So you take a look at other metals, and is suddenly a theme developing around metals that metal prices are trading lower, maybe because of trade wars, and you see a break here, then that's going to strengthen things. So look at how other markets are reacting when assessing gold when it's breaking downwards or upwards. Here's crude. There's not much to add to this. We're stuck in this big triangle, and I guess we can argue this looks like a head and shoulders, head, left, right shoulder. Now that setup is on the break here that it becomes interesting. It's the same thing with that triangle. It's only on the break here that it becomes interesting. If it goes lower and takes out this low here from September 7th, we might trade a little bit lower, but we'll be faced by this upward sloping trend line. So I wouldn't get too excited if we take out low. The only thing that is really interesting now is that break. And obviously, the more and more we push here, the more and more is going to be possible that we can just box price in here and then either bullish or bearish. But right now, it's just the bullish side that is interesting, not the bearish side. S&P. Not an easy one to trade, unfortunately. I did post an update on Trade Captain yesterday. I said if you're scalping short-term traders, you can focus on 28.79. Unfortunately, the market traded below this level and got it stopped out. If you were trading on the back of that. Now, if we look at this, clearly we're still in an uptrend above the September 7th low. So I don't want to make any big picture changes here. I just pushed this down a bit. So if it does go back down to 28.87 and maybe a little bit lower, I suspect traders will buy. But obviously stop loss orders, they're probably going to go down here. So that's something to focus on, and something definitely that's going to become relevant is if we take out that 2018 high. Take that level, take that level out. Sorry. If we take out that level, I think we could potentially have a little push like that. I also suggest you check out the Dow. The Dow is looking quite interesting in a similar sort of bullish breakout situation. Here is the German DAX, some fire today, 1%. So there's not too much to add here. You know, if one wants to buy stock markets, well, the best one was the Japanese stock market. If you want to scalp it, I still think it's going to go to the upside. That's sort of the best right now. You do have like maybe the S&P could potentially work as well. And the reason why I both like the S&P and I both like and the Japanese stock market is because we're already in an uptrend, which makes it easier for us to buy on a dip or buy on a breakout and then quickly reduce our stop loss into reduce our stop loss here. And this like there's no limit really to how much higher they can go. Well, obviously there's limits, but there's no immediate resistance level in the Japanese stock market. You have the 2018 high, but that one is far, far away. We haven't been there for some time, and the market could still add a bit more. You can see there's nothing here. We took out here, and there's nothing until this high. This is another 2.87%. But if you look at the German DAX, I think percentage-wise, this stop is further away, or this high. It's at 3.34%. However, though, the big problem with this is that you're dealing with this downward sloping trend line. So we need to be clever here. This is not a market that we want to deal with, even though I think we're going to head to the upside. This is a market where you can position yourself. So if it goes to the upside, and then maybe you think, well, Donald Trump is going to do something hasty, or something is going to happen that's going to diminish his power. Maybe he will now win and do good. And not him personally, but maybe the Republicans are not going to do good at the midterms election. Maybe you have that thesis or that idea, and you just want to be bearish. Then maybe this is a better market at that point because this is already bearish. It's the same thing with the sort of the China A50 or the Shanghai stock market. The China stock market, where you can't trade it directly, but it's just above that low, right? That I showed you in the beginning of the presentation. So if we take that low out, it should be relatively easy because there should be a lot of stop loss orders below that low. So we need to be clever from when deciding which market to trade, the news and the sort of the mood of the overall market. Okay, let's talk cryptos. Bitcoin had a bit of a sell-off yesterday. I actually did not pick that up. Cryptos, Bitcoin in particular, not too much action. It will be probably something very talked about if we trade below 5,786. What you need to remember is if we take this level out, we will have completed this massive ascending triangle pattern, and we could potentially have volatile decline of about 40% to the downside. You have Ethereum, which we talked about a few days. We did a special update on the Trade Captain handle. So we're doing special webinars just on this handle, and you will see some notifications on mine, but it goes directly here. So we did a crypto update here. We did a special one, and we said that if it goes up here, I think traders are gonna sell because we are still in a downtrend. So people selling here. If it swings up, I still think they're gonna sell. I'm not super enthusiastic about selling here, but it's definitely bearish. If you look at Ripple, it's firmly bearish below $37. I think if it swings up to 30 cents, sorry, 37 cents. If it swings up to 30 cents, I think traders gonna sell again. And even here with Bitcoin Cash, it's clearly in a downtrend. It hasn't moved back to my sell zone. but the trend is clearly bearish below 665. And I think Bitcoin could be the next thing. And I haven't actually, I have shorted cryptos for a short period of time. But the problem when you trade cryptos on margin is that they charge you very high financing costs. And uh, it's quite expensive, really. And then you have problems that when these markets decline, they decline with 40%. But when they gain, they can gain 1,000% in a week or two or a month or two. So, like here, for example, 500%. So I think here that I'm contemplating of selling, shorting Bitcoin. I'll see if I can do that potentially, because I think this should be a nice decline here whenever this happens. But you just need to be careful with the financing costs involved when shorting and the risks involved when shorting as well. Okay, I think we're gonna wrap things up. Let's just see if there's any quick questions. Hey Benny, how you doing? Cheers, Maurizio. Yeah, I agree. David asked about the Nikkei, and it performed really well. Um, let's see if it continues to move to the upside. Okay, good morning, Antonio here as well. Nice, it's good to see. I can clearly see now there's more and more people joining for the live webinar, so that's awesome. I'll do my best to try to start exactly at 9 a.m. as well. Okay, guys, you know what I'm gonna say now, right? So smash that like button, and I'll see you guys tomorrow at 9 a.m. London time here at tradecaptain.com. Again, as well, don't forget to follow on Twitter and as well on Trade Captain. Definitely check out Trade Captain to see the overall content. And as well, in general, I mean, if you can, and if you like the content, don't forget to like our stuff and retweet our stuff. So the website itself, it's a new website. We've been around since August last year, more or less. So we need all the help to grow it. Okay, have a good day, guys, and I'll see you guys tomorrow. Thanks.